Tariff chaos and AI disruption team play were on the forefront of the global stock market yesterday. The Dow Jones Industrial Average was the worst performer among the major US stock indices as it dropped by 1.7%, hitting a 3-week low due to AI disruption play and as well as private credit fears that dragged down its top component stocks, which is Goldman Sachs, by more than 3%. The US dollar traded much lower as the Sell America trade narrative resurfaced back into the global markets due to Trump's defiance on last Friday, US Supreme Court making his trademark reciprocal tariffs void. Gold continues to extend its rally from last Friday, inching higher in yesterday's session, breaking above the $5,170 per ounce, potentially extending its ongoing medium-term rally since the low that was being seen at the start of this month. Oil prices continues to trade firmer, holding above a key short-term support level at $65.60 per barrel, due to a very fluid situation in Iran, where a prominent independent researcher warned that US and Iran may go into an armed conflict. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Tuesday, the 24th of February, 2026. So let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. So today will be a much more slimmed down version of the daily dose, where I will only cover the charts of the day rather than taking into account of all the detailed intraday technical analysis. But I will actually highlight the updated levels to watch for the 3 major US stock indices that we cover on a daily basis due to yesterday's significant intraday movement. All right, so let's start what happened or what has taken shape yesterday over here. So yesterday, we continue to see this tariff chaos that's being played out in the global markets over here. So let me share my screen. All right, so what I could see over here, Trump was rather very defiant as usual. That's his trademarks rhetoric. So he actually voted higher tariffs for nations that play games on deals. So basically, what these play games on deals mean over here, because we know that on last Friday, the US Supreme Court deemed that Trump's reciprocal tariff, the baseline of that 10%, where he used it under the IEEPA Act, is deemed as what I call it illegal. So with this illegality that is being we call it being given out by the US Supreme Court, some countries that has already done deal under this backdrop has now tried to actually withhold back what they earlier signed on with the US White House administration. So one of them will be the key trading partners with US will be European Union over here. So the European Union froze the ratification process for its agreement with the Trump administration, seeking clarity of Trump's existing tariff program. So with that, it angered the US president. It has kind of give a pretty much rhetoric by US President Trump to actually push ahead to maintain this ongoing 10% baseline tariff that he introduced last year. But right now he upped the ante to 15%. So that created a kind of chaos into the market over here. Okay, give me, I think the screen is frozen. Right, 1 second. Yeah, I think the screen is frozen. Okay. Let me see. Yeah, good, it's back again. All right, so basically he threatened higher tariffs on goods from countries that play games with their existing trade agreements. All right, so that created a negative feedback loop into the market. And what's interesting over here is that there's this excuse to actually continues to actually sell US equities that are related to this AI disruption / scare trade, right, that has taken hold in the US stock market in the last 2 weeks, primarily focusing on the software company like Microsoft will be one of them, where we start to see AI tool maker like Anthropic creating various AI tools that could disrupt their core software businesses model over here. So then yesterday we have this little, not really well-known research house, independent research house called Centrini. So Centrini, and as well as this guy called Talib, the author of this Black Swan, simultaneous, I would say not really simultaneously, on the same day, kind of issue their own individual opinion slash research report by Centrini that fuel this add fuel to this AI scare trade over here. So there's this various report out by Centrini Research. It outlined potential risks to various segments of the global economy due to the AI disruption using hypothetical scenarios set in the future. So basically, the report issue warnings potentially lead to companies that are dealing with intermediaries like IBM, where there is this particular legacy code that's being used by IBM computers called COBOL could be deemed obsolete by this new tool issued by Anthropic called Cloud Code over here that could actually disrupt IBM legacy business, and as well as DoorDash and American Express. So DoorDash and American Express, they are intermediaries which used to basically their revenue are actually driven by what collecting fees from their end user. So with this potential AI disruption, the businesses of American Express and DoorDash could be reduced as well in the near future, where the report actually offered a kind of a very doom scenario where AI agent could disrupt industries such as food delivery and payment processing, which is DoorDash and American Express, causing anxiety in the stock market and leading to a decline in shares of affected companies. So if you look at the heat map of the S&P 500 yesterday, very clearly we see a slew of red inside the financial sector, which is part of this we have this negative feedback loop triggered by a payments company like American Express and MasterCard, Visa, likewise over here, and also spreading over to traditional investment banks as well, like JP Morgan and wholesale banking, which is down by negative 4.22%, and Goldman Sachs is down by negative 3.25%, given the fact that Goldman Sachs is the largest market cap in the Dow Jones Industrial Average over here. So you look at the Dow Jones Industrial Average component under this website called Slick Chart. They're able to actually show us guys the 30 component stock of the Dow Jones Industrial Average and their daily performance. So if you look at, okay, sorry, I think that's, because this is a free website, there will be this advertisement here and there. So Goldman Sachs, 11.3% weightage. Yesterday it was down by negative 3.25%. And the third biggest weightage is now Microsoft Corporation, which has around 5% weightage, also down by negative 3.21%. Due to the AI disruption play, potentially leading to a lesser usage of Microsoft software in the future, right, based on that Centrini report. So if you look at the heat map of the S&P 500 yesterday, those mega cap technology stocks that are pretty much centered on this potential AI disruption, Microsoft is one of them, down negative 3.21%. We have even Google also got hit negative 1.11%, followed by Amazon negative 2.3%, and Metal down by negative 2.81%. But however, more on the equipment side of things, where the hardware businesses managed to survive the sell-off yesterday. So Apple managed to inch or outperform with a positive gain of 0.6%. And interestingly, among the semiconductor, NVIDIA managed to we call it steer away from the bloodbath with an outperformance of positive 0.91%, as market participants look ahead of its key earnings report and revenue guidance that's to be out on this coming Wednesday, which is in fact tomorrow, 25th of February, after the close of the US session. So in terms of Singapore timing, it will be on early Thursday, 26th of February after 5 a.m. Singapore time over here. And another news I want to share with you guys over here is that more pertaining to the financials is due to this fear that is ongoing in this private credit managers that spread from Black Owl over here. Okay, let me expand the screen so that you guys could have a better view. All right, so that is private credit fears that is brewing in the private credit market in the US. So basically, private credit is pretty much opaque over here. Being opaque over here is that it doesn't really comes into the radar of the Fed, where you know that after the US subprime crisis, those commercial banks, wholesale banks got to report certain figures to regulators over here, but however, not so much of the private credit. So they themselves are being lenders of we call it companies that doesn't really have a good credit standing over here, and they also take in investors' money to kind of raise funds to lend money privately to these companies, and these companies covers US software sector as well, which got hit recently by this AI disruption trade over here. So Blue Owl manager is private credit manager is one of them got hit, where it starts to halt redemption at one of its funds, and that starts to spread out to other private credit giants like Apollo and KKR that continue to slump 5% and 9% on Monday. And UBS analysts estimate that in the worst case scenario, private credit defaults could rise to 8% over the next year. So we know that private credit has been in the one of the hottest asset classes in the last 3 years or so, and that also kind of allow we call it pull in traditional banks' money into the private credit market as well, in order to be in competition with them. So that created a negative feedback loop into those traditional wholesale banking stocks yesterday, with the likes of JP Morgan and Bank of America, and as well as we know that Goldman Sachs being an investment bank, they themselves also kind of indirectly involved in the private credit market through other special purpose vehicles over here. All right, so that causes that's explained us why the underperformance of the Dow Jones Industrial Average yesterday, where it lose negative 1.7%, underperforming the Nasdaq 100, down negative, which only down negative 2.1%, and the SPX 500 down only negative 1.04% due to the outperformance of NVIDIA, which managed to gain by 0.9% yesterday, given the fact that NVIDIA is the biggest component weightage stocks in the SPX and the Nasdaq 100. And the Russell 2000 also underperformed yesterday, down by negative 1.6% over here. And over in the oil market over here, oil continues to hold firm above 65.60 for the West Texas crude oil. This is where there's this well-known independent, we call it analyst, that covers the Middle East / oil market for many decades, called Fisher Raki. So yesterday, Fisher Raki mentioned that the US and Iran appear set for war. So given that his prominent stature in the arena of the energy research market in the Middle East, he actually mentioned his opinion has a significant weightage towards the market movement of the oil prices over here. So he also mentioned very starkly that the US and Iran are set to resume talks in Geneva on Thursday, but Fisher Raki states that the talks are guaranteed to fail due to restriction and the Iranian perspective over here. All right, and also what we could see over here is that given the fact that with this ongoing trade chaos, together with the AI disruption play and coupled with rising geopolitical risk premium, we now start to see a bit of risk off play in the global stock market. And yesterday, Trump decided to uncover new statutes that is not being covered by last Friday's Supreme Court ruling. Now he's trying to evoke Section 232. So Section 232 is more on the sector-specific trade tariffs over here that targeted individual sector that is deemed as what I call eating in causing what I call a negative situation in the US specific industry. Let's say, for example, Trump deemed that uh, various countries' semiconductor industry is playing an unfair advantage that harm US semiconductor players. He will invoke Section 232, but that involves the various regulators in the US to do some form of investigation before introducing this tariff over here. So it's a much more of an obstacle that he got to overcome comparatively to the IEEPA tariffs, where he could actually issue it by signing an executive order over here. So he's now trying to look for ways to circumvent last Friday US Supreme Court ruling. So at a nutshell, potentially there's a lot of uncertainty in the marketplace right now. So there could be higher tariffs down the road, given the fact that he still wants tariffs to be in play. So giving him the hand to actually use tariff as a way to extract concession that the White House deemed as important on various countries. Right. So overall, if you look at the performance of the other global stock market yesterday, Europe was down as well. The DAX was trading lower, down by -1% over here. And we have the FTSE almost unchanged, -0.02%, supported by a couple of resources stocks over here. And over in Asia today, a bit of mixed performance over here. What's interesting over here is that the Nikkei 225 managed to trade higher today, up by 0.76%. The futures that has been trading since US session yesterday, now up by 0.8%, erasing yesterday's US session losses. The loser today is the Hang Seng indices, down by -1.9%. And what's interesting over here is that the A-shares market is now back into business after the closure of the entire week last week and yesterday. So now is the usually the Chinese stock market will reopen on the 8th day, the 8th day of the Lunar New Year. So it's up by 1.31% right now as we are speaking, and trading near the session high. And the smaller subset of the CSI 300 will be the China A50. It's up by also 0.6% over here. And going over to the other Asia Pacific stock market, we see the ASX 200 down by -0.10%. The Kospi 200 continues to be in red hot, trading up by 2%, hitting another fresh all-time high. And our STI is down by -0.7%. So what we could see over here is that it's a bit of risk off taking shape in some of the Asia Pacific stock market, where we see a performance of decline in the Singapore Straits Times Index, the ASX 200, and as well as the Hang Seng indices. But however, we see positive gains in the Nikkei 225, the Japan Nikkei 225, as well as the China CSI 300, the China A50, and together with the Kospi 200 index that managed to surge to fresh all-time high as we are speaking right now. So two things that we are seeing right now is, number one, the US market seems to be underperforming against the rest of the world. Mixed performance in the Asia Pacific region so far on intraday basis. Oil prices continues to hold firm, and I'll share with you that gold price continues to trade higher above the $5,170 per ounce over here. All right, so now I covered, this is the first segment of what has taken shape yesterday. Now let me touch on the second segment, which is more of my charts of the day that I, in my own opinion, potentially there could be some form of interesting technical configuration that is playing out over here. So my first chart of the day I will share you guys will be, okay, before I go to the chart of the day, pardon me, let me share you on the updated levels of the three major US stock indices that we cover on a daily basis, which is the SPX, the Nasdaq 100, the Dow Jones Industrial Average, which is the US Wall Street 30, which is much more important given the fact that it's one of the popular traded instruments, okay, over here. All right, so let me expand my screen. Okay, so with that, let me touch on the US Wall Street 30, which is the representation of the Dow Jones Industrial Average. So very clearly, it broke below the 50-day moving average. So previously, this 50-day moving average has been in play in support since 25th of November last year. All right, over here. So yesterday, very clearly, it has a daily close below this level, the 50-day moving average, indicating that its previous outperformance against the Nasdaq 100 and the SPX 500 has starts to dwindle off or even potentially got erased. All right. So yesterday we were bullish between 49,265 and the first resistance, the top of the range at 49,707. So it almost hit the range top, 49,707, printed a high of 49,692 at the start of the US session before it starts to see a sell-off throughout the remaining hours of the US session. So what I could see over here is that this is a technical damage, at least in the short term, on the US Wall Street 30. Firstly, a daily close below the 50-day moving average that has previously in play or has been supporting the US Wall Street 30 in the last 4 months or so since 25th of November. And also we have a bearish reaction right exactly at the range top, 49,707. So with that, there could be further potential downside weakness on a short-term / intraday basis for the US Wall Street 30. So with that, we will have a bearish bias on the US Wall Street 30 for now, using the broken down short-term pivotal support level now turns into a pivotal resistance, 49,265. As long as this level is not surpassed to the upside, potentially we may see further weakness on the US Wall Street 30. Near-term support level to watch on the intermediate basis, that means i.e. on the intraday basis on between the 1 to 3 days, 48,710 followed by 48,388 for now. All right, so 48,388 is also the minor swing low of 21st of January and 2nd of February this year, and also a one-time Fibo extension taken from the current all-time high. Okay, over here, all right, the one-time Fibo extension on the downside confluence very closely with 48,388 as well. Only a bullish breakout and hourly close above 49,265 will invalidate this short-term / intraday weakness on the US Wall Street 30 to see a squeeze up again to retest that range top that has been formed since 19th of February, 49,707 / 49,940, which is the which is the bearish reaction minor swing high of 18th of February that confluence with the former minor swing low previously supported that managed to lead to the fresh all-time high that was seen on 11th February, now turns into a critical pullback resistance at 49,940. All right, so that's for the US Wall Street 30. Next will be the SPX. So despite the fact that the SPX yesterday sell off and didn't break our short-term pivotal support at 6,797 over here, so it also hit our resistance level at 6,916, 6,932, the lower limit, which is the confluencing with the 20-day and the 3-day moving average before the sell-off take place. So it didn't break below our support level yesterday. We have a bullish bias indicating that as long as these 6,797 holds, that could be a retest of the range resistance. But given the fact that the Dow Jones is rather weak, and also the bearish reaction of the 20-day and the 50-day moving average also right exactly at our range resistance, I will be having a neutrality stance for now on the SPX 500. So neutral between 6,797 and 6,916, 6,932. All right, so that's for the SPX. Next will be the Nasdaq 100. So the Nasdaq 100 also managed to survive our pivotal support at 24,580. All right, it didn't break below it and managed to see a bounce right now as we are speaking. Yesterday, it hit a high of 24,989, almost very close to our range top at 25,085, where we have a bullish bias for it to retest, but it did actually retest it yesterday. So with the ongoing bearishness in the Dow Jones Industrial Average, and also with NVIDIA still holding on to the support over here, the Nasdaq 100 may continue to trade in a sideways fashion for now, at least in the near term. So neutral between our pivotal support that we have yesterday, 24,580, and the upper limit will be our range resistance that has been in place since 19th of February at 25,084, now converging very closely towards the downward sloping 20-day moving average as well. So flipping to a neutrality stance for today on the intraday basis between 25,084 and 24,580 for now on the Nasdaq 100. All right, so with that, that sum up the updated technical bias and key levels to watch on a short-term basis on these three major US stock indices. So let me now take you through the chart of the day. So one of the chart of the day will be the West Texas crude oil. So the West Texas crude oil managed to shape a higher low right above our pivotal, not right above our first intermediate support that we highlighted yesterday at 65.59, which is this former minor swing high of 5th of February and 11th of February. Did a bullish breakout, hit the 67 figure level or 66.98, pull back and managed to stage a bounce. The RSI managed to show a higher low that is in a much more steepened ascending trendline support compared to the previous ascending trendline support that was drawn from the low of 13th of February to 23rd of February, indicating some form of acceleration in bullish momentum by this steepening of this ascending trendline support that is being drawn on the hourly RSI. So with this positive technical configuration, I would have adjusted tightened pivotal support for today on West Texas oil using 65.59 short-term pivotal support level as my chart of the day, maintain that bullish bias. Next resistance level to watch now is actually attempting to break above 66.98, will be 67.80, followed by 69.08, 69.26 in the first step, which is a bunch of Fibo extension cluster, and 69.26 if we go back in time over here. Okay, that's actually the minor congestion area previously formed on 30th of July and 4th of August last year. Only a bearish breakdown and an hourly close below 65.59 that would invalidate today's direct bullish bias view to see a choppy corrective pullback sequence again to retest the rising 20-day moving average, acting as the next near-term support level at 63.92. So West Texas crude oil will be one of my chart of the day due to its ongoing positive technical configuration using an adjusted short-term pivotal support at 65.59. The next chart of the day will be the gold XAU/USD. So gold yesterday we have a neutrality stance because it hit our it actually tried to actually challenge the 5,170 level, did a minor pullback before clearing it on the US session yesterday at the 22-hour mark Singapore time, which is at around 10 p.m. Singapore time yesterday. And today what we could see is we managed to survive a pullback and now attempting to bounce off from the 5,170 level. So two key support level to watch on gold XAU/USD as bullish momentum starts to resurface, at least in the near term / short term basis. So using a slightly lower short-term pivotal support today, just in case of any whipsaw, will be at 5,047, which is very close to the rising 20-day moving average. So as long as price action didn't breach below 5,046, pardon me, 5,046, we will flip to a intraday bullish bias stance for gold XAU/USD, with the next two resistance level to watch will be 5,307, 5,320, 0.764 Fibo extension from the close to the 0.764 Fibo extension from the low of 2nd of February, and the 76.4 Fibo retracement of that previous decline of 29th of January to the low of 2nd of February. Okay, so that's how I derive 5,307, 5,320, which is so a minor congestion area of 30th of January. Above 5,320, potentially seek out the next intermediate resistance level, which is the minor swing high of 30th of January at 5,448. only a bearish breakdown below 5,046 that would invalidate today's bullish buyer's view to see another round of choppy corrective decline sequence unfolding, revisiting 4,960 followed by 4,842 in the first step, which is the minor swing low of 17th of February. So gold will be one of our chart of the day, given that some form of short-term momentum, bullish momentum has started to resurface after yesterday's bullish breakout of 5,170. All right, so to sum up, that will be my two charts of the day to watch: gold and as well as West Texas crude oil. Both have a potential bullish short-term intraday, bullish short-term slash intraday technical configuration potentially. All right, so now the third segment usually will cover will be key events slash economic data to look out for today. So let me call out the calendar for you guys over here. Okay, so very quickly, calendar. Okay, so today key event on slash economic data to look out for will be on the Tuesday, the 24th of February over here. Let me reduce it. Come on. Okay, give me a minute. I think it's hung for a while. Okay, good. It's moving. All right. So for today, during the start of the European session, not much of a key data to look at. But however, around the evening time, Singapore time at 6:30 p.m., we have an ECB official speaking, ECB Machado, then followed by a Federal Reserve official 9 p.m. Fed Gooseby speech over here. Then at 10 p.m. we have Fed Bostic and Fed Collins speech over here at this point. And also we have a slew of Federal Reserve officials speaking at 10:15 p.m. and 10:30 p.m. Fed Wheeler and Federal Reserve official Cook speech over here. So key US data to take note of will be on the Conference Board consumer confidence for February over here. So at 11 p.m. Singapore time. So market participants or market consensus is expecting a recovery from January print of 84.5 to 87.3 over here. And also today will be the State of the Union over here. So State of the Union will be Trump's address to US Congress. So market participants will be paying a close attention to his speech as well, given the ongoing tariff chaos that he's evoked over the weekend over here. So with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.